Hey everyone, welcome back to Corporate Decoder. Today, JTAI Inc. just filed an 8K disclosing the adjournment of a special stockholder meeting and a change to a record date for a distribution, and I am seeing some interesting signals about investor participation. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company tried to get a vote on a big merger and spin-off deal, but it seems like not enough shareholders showed up to make a decision, so they had to push the meeting back. So Jet.AI Inc. is a company that has been in the news lately with some big potential deals. They had a special meeting for stockholders where they were supposed to vote on a merger with FlyExclusive Incorporated and a spin-off of a subsidiary called Spinco. Think of it like this, Jet. I wanted to combine with FlyExclusive and also spin off one of its own businesses, Spinco, to its shareholders. The problem is, for these big decisions to go through a certain number of shareholders, a majority of the outstanding shares need to vote. On the 11th of June 2026, when they held the meeting, only about 34.2% of the shares that were supposed to vote were actually represented either in person or by proxy. Now, most of the votes that were cast, about 99%, were in favor of these deals. But that is not enough. You need that majority of all outstanding shares to approve it. Because they didn't get enough votes, they had to postpone or adjourn the special meeting. They've rescheduled it for the 23rd of June 2026. It is going to be held at the same virtual link, so shareholders don't need to do anything new if they already voted, unless they want to change their vote. This situation reminds me a bit of what happened with Bed Bath & Beyond. When companies can't get enough shareholder support for crucial deals, it often signals underlying issues with investor confidence or communication. While JetAI only has about 1.4 million shares outstanding, getting just over a third of them to vote is a concern. For a hypothetical $1,000 investment in JetAI, this low turnout could foreshadow challenges in executing future strategic plans, similar to Bed Bath and Beyond's struggle to rally support for its turnaround efforts which ultimately failed. Now, there is another key date they changed. This relates to the spin-off of JetAI's subsidiary, Spinco. They initially set the 15th of June 2026 as the record date. This is the date that determines who gets the shares of Spinco when it is distributed, but on the 12th of June 2026. They pushed that date back to the 25th of June 2026. So, if you own JetAI stock on the 25th of June, you'll be eligible to receive shares of Spin Company. After the spin-off shares are distributed, those Spinco shares will then turn into shares of FlyExclusive's Class A common stock as part of the merger. The whole thing is still dependent on getting shareholder approval and meeting certain closing conditions. The company put out a statement warning about forward-looking statements, which is pretty standard. They're basically saying that while they expect certain things to happen, there are risks and uncertainties. Things like not being able to get a quorum for the meeting or not being able to meet listing requirements could cause actual results to differ from what they're projecting. It's important to remember that these kinds of statements are just predictions. The filing also mentions an exhibit, a press release dated the 11th of June 2026. This press release likely contains more details about the adjournment of the special meeting. They also included Exhibit 104, which is the cover page interactive data file, basically a way for computers to read the filing. Looking at the broader context, Jet.AI Inc. is listed with a very small market cap of just $10 million and a stock price hovering around $6.75, with a surprisingly wide trading range this past year from $5 to $804. This volatility suggests a lot of speculation, or perhaps a recent significant corporate event that drastically altered the stock's perceived value. With only 7 employees, this is a very lean operation. Institutional ownership is concentrated, with Cygnus Capital Advisors holding a significant 14.4%. The low voter turnout for such a crucial meeting, especially when the vast majority of votes cast were favourable, could indicate a few things. Perhaps shareholders are not engaged, or maybe they are waiting for more clarity or better terms. This is a critical juncture for the company, and the ability to secure sufficient shareholder support will be paramount to executing its strategic vision. And as seen with many smaller companies in similar situations, if shareholder engagement doesn't improve, companies can struggle to move forward, a pattern we've observed in companies like Radio Shack before its eventual bankruptcy. What I am watching here is not just the outcome of the vote, but the reason for the low turnout. Is it apathy, or is it a sign of deeper distrust or concern among shareholders? The fact that so many of the votes cast were positive is a good sign, but the hurdle of getting a majority of all outstanding shares is a significant one. My biggest concern is that this low participation could be a recurring issue, making it difficult for JetAI to achieve its long-term goals. The risk I am watching is whether the company can effectively engage its shareholders before the reconvened meeting. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. You can also join our Discord community by clicking the link in the description.